All the payments should come under expenditure side and all the receipts of receipt and payment account should come under income side, but only revenue items. Whenever you see each and every item in your receipt and payment account, immediately you have to see your opening balance sheet as well as adjustment. Anything related to that particular item. Outstanding subscription of current year add, outstanding subscription of previous year minus. Outstanding subscription received in advance in the previous year add, received in advance in the current year minus. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the third session and we were discussing about model question paper. So in a previous session, we have discussed 1 marks, 2 marks as well as 6 marks problem. So in today's session, we shall discuss about 12 marks as well as 5 marks practical oriented problems. Okay, so we shall begin the session here. So today we are discussing about your part D, that is for 12 marks. So they'll ask you 7 questions, out of which you are going to answer only 3 questions. So remember, so when compared to your previous year, so there is a slight change. So in your previous year, out of 7 questions, you are going to answer only 4. But here in this year, out of 7 questions, you are going to answer only 3 questions. So let us see what are the problems they have asked in your model question paper and what is a solution for that problem. Okay, so this will be your 7th main. Answer any 3 questions. So I have asked 7 questions, out of which you are going to answer only 3. Each question carries 12 marks. So the total weightage is 3 into 12, that is 36. So your part D. So here you are going to answer for 36 marks. Now go through the question here. That is 32nd question. That is till 31st question, it will be part C. So your 32nd question is, following are the balance sheet and the receipt and payment account of Start Sports Club Sagara. So this is a problem based on not-for-profit organization, that is on NPO. So your first problem itself under part D will be from not-for-profit organization. So as usual, they have given the balance sheet here with liabilities as well as assets. So we shall go through later what it is. And they'll give you the receipt and payment account. So they'll give the old balance sheet as well as receipt and payment account for the year ending, and they have given the receipt and payment account and with few adjustments. So the adjustments are like outstanding subscriptions for 2021-22, 2,500. Like that they have given certain adjustments here. And they have asked us to prepare income and expenditure account for the year ending 31st-3-2022. So we have to prepare income and expenditure account as well as balance sheet as on that date. So now what is our duty? So they have given us opening balance sheet, receipt and payment account along with few adjustments. So we have to prepare income and expenditure account as well as balance sheet. So you know, under not-for-profit organization, what are the accounts to be prepared? Receipt and payment account, income and expenditure account as well as balance sheet. In this problem, that is for 12 marks, they'll give you opening balance sheet as well as receipt and payment account. And we have to prepare income and expenditure account as well as balance sheet. Now, once you see the problem, in your receipt and payment account, first we have to segregate revenue items as well as capital items. So this is also an important question for 5 marks practical oriented question, where they'll ask you few items where we have to segregate them into revenue as well as capital. Now, once you see the 12 marks problem, segregate them into revenue as well as capital items. Now, what do you mean by revenue items? It may be revenue income or revenue expenditure. So, what is this revenue which is recurring in nature? So, for a not-for-profit organization, any income or expenditure which is recurring in nature is called as revenue items, as well as capital items in the sense which are not recurring in nature. So, rarely these income as well as expenditure will incur. So, they are called as what? Capital items. Now, let us see the payment side. Let us see which are the revenue items and capital items. So we have salary. So of course salary is a revenue items because each and every month we have to pay. So it is a revenue expenditure. So it is a revenue item. Next, sports material. So since it is a sports club, they have purchased the sports material. So it is not a revenue item because once the sports material is purchased, it will be used for many years. Correct? So it is a capital item. Next, investment. It is a capital item. Postage, it is a revenue item. Electricity charges, a revenue item. Upkeep of grounds, a revenue item. Newspaper, revenue items. So these are the revenue items, and by balance carried down. So this I'll tell where we have to record. So mainly we will record this in the balance sheet. Okay, so I'll tell you how we have to record in the balance sheet. So we have segregated all the items in the credit side. In the same way, we shall see the debit side. So to balance brought down, remember, so this will not come anywhere in your solution. So this to balance brought down is nothing but, so they have given 10,500. So this 10,500 is what? So if you see the opening balance sheet, what they have given, that is cash. So cash they have given 10,500. Same that cash itself, they have recorded it as to balance brought down in your receipt and payment account. So this will not come anywhere in your solution. Next, to subscription, it is a revenue item. Entrance fees, now you have to be careful with the entrance fees. So it can be capitalized or it may be a revenue items also. Okay, so you have to see the adjustment. Now if you see the adjustment, regarding entrance fees, they have told half of the entrance fees are to be capitalized. In the sense, half is revenue and half is capital item. Next, sale of old newspaper. So it is a revenue item. Next, to sports fees. It is also a revenue item. So we have segregated them into revenue as well as capital item. Now we shall directly go through preparation of income and expenditure account. Now, how do you begin your solution? As I told you, the presentation of your paper is very important. So write the heading income and expenditure account for the year ending 31st/3/2022. Now, whatever the items which was there in the payment side, so these items should come under expenditure side and receipt side should come under income side of your income and expenditure account. So what is the format of income and expenditure account? You will be having debit as well as credit, expenditure, amount, income, amount. So all the payments should come under expenditure side and all the receipts of receipt and payment account should come under income side, but only revenue items. Okay, so rest of the capital items will come under balance sheet. Now we shall go through the first one, salary. It is a revenue item. Now whenever you see each and every item in your receipt and payment account, immediately you have to see your opening balance sheet as well as adjustment. Anything related to that particular item. Now we have salary 23,000. In the same way, we have an adjustment. Outstanding salary as on 31st/3/2022. Always remember, outstanding salary of current year we have to add. Outstanding of previous year we have to minus. Now this is current year, so we have to add this outstanding salary. So how do you write? To salary 23,000, add outstanding salary of current year 8,000. Now if you see the balance sheet, we have outstanding salary here. Correct? So this is of previous year. So what you have to do? We have to minus. So hope you are clear with outstanding. Any income or expense outstanding of current year we have to add, outstanding of previous year we have to minus. So how do you write then? So salary 23,000, add outstanding current year 8,000 minus outstanding of previous year 6,000. So this is how you have to show salary 23,000, add outstanding. So this was in the adjustment and this was in the balance sheet. So we have to minus right in the outer column. So hope you are clear with salary. Next one is sports material capital item, investment capital item. This comes under balance sheet. Next we have postage. Any adjustment relating to postage? There is no adjustment. In the same way, anything relating to postage in the opening balance sheet? Nothing. So write directly. So how do you write? To postage 1,400. Next one, We have electricity charges revenue item. Any adjustment relating to electricity charges? There is no adjustment. In the same way, in the opening balance sheet, we have nothing relating to electricity charges. So directly you will write. So how do you write? To electricity charges 1600. Next one is to upkeep of grounds revenue item. There is no adjustment. In the same way, there is nothing relating to upkeep of grounds. So write directly to upkeep of grounds 6500. Next one, buy newspaper. Yes, it is a revenue item. There is nothing in adjustment as well as in the opening balance sheet. Write directly newspaper 6000. Next, two balance carried down, I have told you, it comes under balance sheet. We shall record it later. Now come to the receipt side. All the items in the receipt side should come under income side of income and expenditure account. So the first item we will not record anywhere because I have told you it's nothing but the cash what they have given in the opening balance sheet. Next, subscription 62,000. It is a revenue item. It has to be recorded in income and expenditure account. But see any adjustment relating to subscription. Yes, we have outstanding subscription of 2021-22 in the sense current year. So what do we do? Add. In the same way, see the opening balance sheet. So whether we have anything relating to subscription, yes, we have subscription received in advance. So at the beginning of the year, correct? In the sense it is of previous year. So what you have to do? Add. So here remember, outstanding subscription of current year add, outstanding subscription of previous year minus. Outstanding subscription received in advance in the previous year add, received in advance in the current year minus. Okay, so this you have to be careful. So what do we do? This is of previous year, that is beginning of the year. So we have to add. How much? 5,000. So how do we take? By subscription 62,000, add outstanding of current year 2,500, add received in advance in the previous year. So we have to add. That is 69,500. Next one, we have what? Entrance fees. It is a revenue item, but they have clearly told half of the entrance fees has to be capitalized. In the sense, half comes under income and expenditure account, half comes under balance sheet. So how do you write? By entrance fees, you have to calculate. So what is the value of entrance fees? 10,000 into half. 1 by 2. That is 5,000. Next, we have sale of old newspaper 2,000. We don't have any other adjustment relating to sale of old newspaper as well as in the opening balance sheet. So take it directly. In the same way, sports fees also we don't have any other adjustment. So take directly these two items 2,000 and 7,500. Now, go through your adjustment. All the adjustment has to be recorded twice. Okay. So, now we shall see at least once we have recorded in our income and expenditure account and once it comes under balance sheet. So, outstanding subscription we have taken. Outstanding salary we have taken. Half of the entrance fees we have taken in income and expenditure account. Depreciation we have not taken. So, depreciation on sports material amounted to rupees 8,500. So, it is a expenditure. Correct? So, where do we record? In the income and expenditure account, in the expenditure side, to depreciation on sports material 8,500. So, hope you are clear with it. So, first, once you see a problem on NPO, go through the receipt and payment account, segregate them into revenue as well as capital item. Record all the revenue items. Simultaneously, you have to go through the adjustment as well as opening balance sheet relating to that particular revenue item and record in your income and expenditure account. Now, balance both the side and the balancing figure will be either surplus or deficit. Okay. Now, if you see the total of credit side, it is 84,000, but in the debit side, it is less. Okay. So, we get a balancing figure of 35,000. So, what is this 35,000? Your credit side is more than debit side. In the sense, your income is more than expenditure. So, what is your balancing figure? Surplus. So, you have to write it as 2 surplus. That will be the balancing figure. So, in this problem, it is 35,000. Okay. Now, we shall go through the balance sheet. So, balance sheet is easy. You have to refer your opening balance sheet. Okay. So, based on opening balance sheet, you will record each and every item and prepare this balance sheet. Okay. Now, go through opening balance sheet. Yes. So, they have given in the question. Correct. Now, go through the opening balance sheet. So, first we shall record all the assets. So, which is the first item? cash, 10,500. But this 10,500, they have written it as to balance brought down. So, it is compensated there. So, now which cash you will record then? So, you have to record this cash. So, by balance carried down what they have given. So, this amount you have to record in the closing balance sheet as cash. How much? 18,500. Not 10,500. So, you have to record 18,500. So, how do we record? Cash 18,500. So, this you have to be careful. Next one, we have sports material 25,000. But here also we have sports material in your receipt and payment side and receipt and payment account. So, that is in the payment side. So, it's nothing but what? If it is there in the opening balance sheet, again if it is there in your receipt and payment account, it means that we have purchased new sports material. So, what do we do with that? We have to add. So, how do we record? Sports material we have here, add that. Then again we have depreciation, we have to minus. So, how to record? Sports material 25,000, add purchase which is there in the receipt and payment account 15,000, less depreciation 8,500. So, total is 31,500. Next one, we have furniture 21,000. Let us see, any furniture is purchased here? No. So, any adjustment relating to furniture? Nothing. So, write directly. So, how much furniture? 21,000. Next, we have land 90,000. There is no purchase of land. If it is purchased, it will be there in the receipt and payment account. Okay, so there is no purchase. In the same way, there is no depreciation or appreciation. So, write it directly. So, how much? Land 90,000. So, we are done with all the assets. Now, come to the liabilities. So, liability we have outstanding salary. Already we have taken, that is of previous year. Next, subscription received in advance. Already we have taken. Capital fund, we have 1,35,500 for which we have to make certain adjustments. So, let us see how we have made. Capital fund, that is opening capital fund, add surplus. So, surplus is what we got after preparing income and expenditure account. If it is deficit, you will minus. If it is surplus, you have to add. Surplus 35,000. Then, if there is any life membership fees or donation, so that you have to add here. But in this problem, we have only entrance fees. Half of the entrance fees are to be capitalized. Correct? So, half we have taken in your income and expenditure account. Half, since it is a capital item, it comes under balance sheet. So, how do you take? Entrance fees 5,000. That is nothing but 10,000 into 1 divided by 2. That is 5,000. Now, you have to total, write it in the outer column. Next, so we are done with all the items from the opening balance sheet. Now go through the adjustment, or first go through the receipt and payment account. We have left out certain item as capital item. So, which is that one? Sports material, we have taken it as purchase. Investment, we have not taken. Investment is what? It is an asset. How much? 20,000. So, take that investment 20,000. Okay. Next one, any other capital item? No. Here entrance fees we have taken, we have added to capital fund. Now go through the adjustment. All the adjustment have to come twice. Once we have recorded in our income and expenditure account, and once it comes under balance sheet. So outstanding subscription, it's nothing but outstanding income. So what it is an asset. So record in the asset side, outstanding subscription 2,500. Next, outstanding salary. What it is? It is an outstanding expense. It is a liability. So, we have to take that liability in the debit side. Outstanding salary 8,000. That is in the liability side. Next one, half of the entrance fees we have taken twice. Depreciation we have taken. Now, what you have to do? Balance both the side and the balance sheet should tally. Okay, so if you add all the liability, we got 1,83,500. If you add all the assets, it is 1,83,500. So, hope you are clear with a problem on NPO. So, this is how you are going to solve a problem for 12 marks. Next question, they have given 33, that is 33rd question. It is on admission of a partner. Now go through this. Ashwini and Anita are partners sharing profit and loss in the ratio 3:2. So they have given their profit sharing ratio. The balance sheet as on 31st/3/2021 was as follows. So they have given a balance sheet, that is before the admission of a new partner. Next, on 1/4/2021, Anvita is admitted into partnership. So Anvita is a new partner. So she is admitted into partnership on the following terms. So let us see what are the terms and conditions here. She brings rupees 50,000 as her capital and 30,000 towards goodwill for 1/6 share in the future profit. So you know, when a new partner enters into a partnership firm, okay, so she or he brings capital as well as goodwill. In the same way here, Anvita has bought 50,000 as capital and 30,000 towards goodwill. Next adjustment, half of the goodwill is withdrawn by the old partners. Now, if they give in the problem, then we have to take the entry. If they have not given anything, then it is understood that the goodwill is not withdrawn by the partner. So, as per Accounting Standard 26, we have to treat the goodwill. That is how the goodwill has to be treated when it has been withdrawn. Next, third adjustment, depreciate furniture by 10% and appreciate building by 23,000. Next, make a provision for doubtful debt at 5% on debtors. So, we shall see how we have to calculate later. Next one, provide 2,000 for outstanding repair bills. Now, these are the adjustments they have given. And what are the account to be prepared under admission of a partner for 12 marks? So, we have to prepare revaluation account, partner's capital account as well as balance sheet. Okay, so these three we have to prepare. Now, we shall directly go through the solution. Now, how to prepare your revaluation account? So, in your revaluation account, if any asset or liability have increased or decreased, so that you have to record in your revaluation account. So, I have told you, so when a new partner enters and the old partners were continuing from long years, okay, so when a new partner enters suddenly, so whatever the assets and liability which was there in the previous business, that is before the admission of a new partner, so it might have increased or decreased. So, in order to know the exact value of asset and liability, so we'll prepare the revaluation account and distribute that profit among the remaining partner. Okay, so that is your revaluation account. Now, a small hint to prepare your revaluation account is that, so your format is simple. You will write the heading revaluation account. It will be having debit as well as credit side. Under debit side particular amount, credit side particular side amount. Okay, so make sure that in your admission you will prepare evaluation account, in your retirement also you will prepare evaluation account, but in your dissolution you will prepare realization account. That you have to be careful. Okay, so in your evaluation account, in your debit side, write in pencil A minus L plus. Okay, so I'll tell what it is. In your credit side it is A plus L minus. So which means that if any assets value have decreased and liability value have increased, you will record in the debit side. In your credit side, if any asset value have increased and liability have decreased. So I have told you A plus L minus. A plus in the sense asset value have increased, liability value have decreased. That you will record in your credit side. So whenever you see a problem, make sure that you draw the format and write it in the pencil, so it will be easy for you to solve the problem. Okay, so this is about your hint. Now, as I told you, your format is simple, particulars, amount and particulars, amount. Now, where do we get the items to record in your evaluation account in your adjustment? Now, we shall go through the adjustment here. So, she should bring capital and goodwill. We will not take here. We will take in partner's capital account. So, we shall take it later. Half of the goodwill withdrawn. It will be recorded in your partner's capital account. Now, go through the next one. Depreciate furniture by 10%. Depreciation means what? Decrease. Furniture is what? Asset. So, decrease in asset. Where do we record? In your revaluation account. Decrease in asset. A minus in your debit side. Correct? Then what they have told by 10%. So, how do you write then? To furniture account, what is the value of furniture? You have to go through your balance sheet. Furniture value is 20,000. So, to what extent it has decreased? 10%. So, 20,000 into 10 divided by 100. So, you'll get 2,000. Why you are writing in the debit side? Because asset value have decreased. A minus asset value have decreased. Next one. And appreciate building by 23,000. So, appreciate means what? Increase. Building is an asset. Increase in asset. Where do we record? In the credit side. A plus. By building. So if they give by, so you have to take the whole amount. To what extent it has increased or decreased, that you will record in your evaluation account. So you will write directly by building 23,000. Next one, make a provision for doubtful debt at 5% on debtors. Now, provision for doubtful debts, what it is? It is a liability. Okay, always remember. So in your balance sheet, we will minus from the debtors. So why do we minus from the debtors? Because it is a liability. Now, if you see the balance sheet, there is no provision for doubtful debts. But in the adjustment, they have told us to create a provision. In the sense, a new liability have incurred in the business. Correct? So, a new liability have come into the business. So, increase in liability. So, it is nothing but increase in liability because it was not there in the balance sheet. But here they are telling us to create. So, increase in liability, where do we record in your evaluation account? In your debit side, that is L plus, correct? Increase in liability. So, what they have told, 5% on debtors. What is the value of debtors? 40,000 into 5%. Okay, so how do you write? To PDD. PDD is nothing but provision for doubtful debts. 40,000 into 5 divided by 100, that is 2,000. Next one, provide 2,000 for outstanding repair bill. Now, if you see your balance sheet in your liability side, so outstanding repair bill is a liability. So, it is not there in the liability side. But in the adjustment, they have told us to create a new liability. It's nothing but increase in liability, correct? So, increase in liability. So, where do we record in your evaluation account? That is in the debit side. So, to outstanding repair bill, 2,000. So, we are done with this. So, all the items for this revaluation account will be there in your adjustments. But you have to see whether it has increased or decreased, for which I have given a hint. Write this hint and solve and prepare the revaluation account. Now, as usual, balance, and the balancing figure will be either profit or loss on revaluation, which has to be transferred only to the remaining partner. And remember, only to the old partners you will share this profit, because all these asset and liability belong only to the old partners. Now, if you see the credit side, it is 23,000, but if you see the debit side, it is only 246,000. So, you will get a balancing figure of how much? 17,000. So, your credit side is more than debit side. So, what it is? Profit. So, how do you write? To profit transferred to partners capital account. So, I have told you it has to be transferred only to the old partners. So, who are the old partners? It is Ashwini and Anita. So, you have to distribute in the ratio 3:2. So, Ashwini, so your profit is 17,000 into 3 by 5, you will get 10,200. Anita, 17,000 into 2 by 5, you will get 6,800. Add these two, you will get 17,000. So, this has to be written in the inner column and the total amount has to be written in the outer column. So, first you will write this, then distribute among the partners in the ratio. So, this is about your evaluation account. Now, we shall go through partners capital account. So, partners capital account is simple. So, there are step-by-step procedure. If you follow that, you will find it very easy. Okay. So, this partners capital account, if you learn properly, it will help you to solve the dissolution partners capital account also. Okay. So, your format is, so we are having 3 partners. So, you have to include the new partner also in your partners capital account. So, your format is particulars, Ashwini, Anita and Anvita. Again, in the credit side, particulars, Ashwini, Anita and Anvita. Okay. So, debit as well as credit, you have to record that also because it is an account. So, first what do you transfer? You transfer the capital of the partner. So, you have to go through step-by-step procedure. First, you will transfer the capital. Next, you will transfer the revaluation account balance. Next, third step, you will check your balance sheet whether there is any reserve, fund and profit and loss account. So, this will be a third step. Next, fourth step, it is relating to new partners, goodwill and capital. Next, fifth step, treatment of goodwill. So, this will be the step in your partners capital account. So, as I told you, first step is what? Capital of the old partners. Okay, so you will record it as by balance brought down. So, What is the old partner's capital? They'll give in the balance sheet. So here they have given capital Ashwini Anita 1,70,000. So we'll record it as by balance brought down 1,70,000 in the respective column. No need for the new partner. Next, second step is what? Your revaluation account balance you have to transfer. So already you had prepared revaluation account. We got the profit. So this profit has to be transferred. So if it is profit, you will transfer in the credit side of partner's capital account. If it is loss, then you will transfer in the debit side of partner's capital account. So profit, so you will write by revaluation account 10,200 and 6,800. So by revaluation account 10,200, 6,800. Next, third step is what? You will check your balance sheet. That is in the question whether they have given any reserve, fund and profit and loss account. So they have given reserve fund, and whether we have profit and loss account, you have to be careful with profit and loss account, because normally your reserve and fund will be in the liability side, but profit and loss account, it can be either in the liability side or in the asset side. So you have to be careful. So if it is in the asset side, you will transfer in the debit side of partner's capital account. If it is in the liability side, then you will transfer to the credit side of partner's capital account. Okay, now we have only one reserve fund 30,000. So this has to be distributed among the old partners in their ratio 3:2. So how do you record? By reserve fund 30,000 into 3:2, you'll get 18,000 and 12,000. So we are done with these three steps. Now your next step is what? It is relating to the new partner's capital as well as goodwill. Correct? So what is partner's capital? So she had bought 50,000 as capital and 30,000 towards goodwill. So for which we have to record it as by bank account. So this is new partner's capital and goodwill. So add these two, 50,000 plus 30,000. So in the new partner's column it is 80,000. Okay. So that is about new partner's capital and goodwill. Next step is what? Your treatment of goodwill. Goodwill treatment. So how much goodwill is bought by the new partner? 30,000. Correct? So this 30,000 has to be distributed among the old partners in their sacrifice ratio. But in this problem, they have not given the sacrifice ratio. So old ratio itself is treated as sacrifice ratio. Now what is the entry for goodwill? So your entry under admission of a partner according to accounting standard 26 is new partner's capital account data to old partner's capital account. So this will be the entry. Okay. So who is a new partner? By Anvita's capital account to old partners, Ashwini's capital account and Anita's capital account. So new partner's capital account data to old partner's capital account. This is as per accounting standard 26. Okay. So your entry is new partner is Anvita. Anvita's capital account data to old partners, Ashwini's capital account and Anita's capital account. Now, this 30,000 what the new partner has bought, it has to be distributed in the sacrifice ratio 30,000 into 3:2. Now, while writing the amount, be careful. Now, it is Anvita. So, you are not going to write anything in the Anvita's column. Okay, so whatever the amount, if you distribute, you will get 18,000 and 12,000, which has to be filled in the remaining partners column. 18,000 and 12,000. Don't write anything in Anvita's column. Now, if you come here, it is Ashwini's capital account and Anita's capital account. Now, you will write under Anvita's column. So, this you have to be careful. If it is Anvita, then in the remaining partners column. If it is remaining partner, then you have to record the amount in the new partner column. Okay. So, 18,000 and 12,000. Same this 30,000 distributed in the ratio 3:2 will get 18,000 and 12,000. So, that you will record here. Okay. Next. So, this is about your goodwill treatment. Again, we have one more adjustment, that is half of the goodwill is withdrawn. So, if they don't give anything, this adjustment is not given, then no need to record, just you will balance and the balancing figure will be carried down. But here they have clearly told you half of the goodwill is withdrawn. So, for which you have to record an entry, that is to bank account. Half of the goodwill in the sense what? Goodwill bought is 30,000. Half of this 15,000. So, 15,000 into 3:2. You have to distribute. So, how much each partner has withdrawn? 9,000 and 6,000. So, hope you are clear with this. If the full goodwill is withdrawn, then to bank account 30,000 into 3:2. Then you will record the amount in respective column. Okay, so this is about your partner's capital account. Now we will balance each partner's column and the balancing figure has to be carried down. Now if you see Ashwini, in the credit side it is 1,46,200, whereas in the debit side it is only 9,000. So you will get a balancing figure of 1,37,200. In the same way, Anita, so 1,08,000 it is, but here in the debit side it is only 6,000. So you'll get a balancing figure of 94,800. Next, Anvita, in the credit side 80,000, but in the debit side we have 18 plus 12, that is 30,000. So balancing figure is 50,000. So this balancing figure has to be carried down, to balance carried down. Okay, so whatever the amount you have carried down, bring down that balance after totaling by balance brought down, same amount whatever it has been carried down here. Okay, so hope you are clear with partner's capital account. Now we shall go through the balance sheet. So in order to record each and every item in the balance sheet, we have to go through the opening balance sheet what they have given in the question. Now if you see the question, we have cash at bank. How much? 32,500. Now you are not going to write that 32,500 because after that new partner has bought capital, goodwill. At the same time the goodwill is withdrawn. Correct? So for which we have to make certain adjustment. So cash at bank 32,500. Let us see how we have to record in the balance sheet. So cash at bank 32,500 plus capital which is bought by the new partner. So when the capital and goodwill is bought, of course the cash increases in the business. Correct? So we have to add capital, we have to add goodwill 30,000, but half of the goodwill is withdrawn, in the sense 15,000 is withdrawn. So we have to minus. So outer column it is 97,500. Next one, we have bills receivable. There is no adjustment relating to bills receivable. Take it directly 8,000. Bills receivable 8,000. Next we have debtors 40,000, but a PDD has to be created. We have created that PDD. So how much was PDD? 2,000. So minus that PDD. So how do you write? 40,000 minus 2,000, outer column 38,000. Next one, stock 25,000. Any adjustment relating to stock? So we don't have any other adjustment. So take it directly. Stock 25,000. Next we have furniture 20,000. I think we have a depreciation of 10%. So 10% in the sense how much? 2,000. So you have to minus that depreciation. Furniture 20,000 minus 2,000, it is 18,000. Next we have building 1,15,000, but we have an appreciation. How much? 23,000. It is increased. So add. So if it is decreased, minus. If it is increased, add. So building 1,15,000 add 23,000. It is 1,38,000. So we are done with all the assets. Now come to the liabilities. So we have creditors. No adjustment on creditors. Take it directly. Bills payable. We don't have any other adjustment. Take it directly. So creditors and bills payable at the same value. Next we have reserve fund. So reserve fund no need to take in the balance sheet because already we distributed in the partner's capital account. So if you see the partner's capital account, so we have distributed reserve fund. Correct? So no need to take that. Next we have capital. So capital also we have taken it as by balance brought down. Correct? So we have taken it as by balance brought down, this capital. Now which capital you will take then? So whatever the amount you have carried down here, these three capital we have to take in the balance sheet. So 1 lakh, that is Ashwini 1,37,200, Anita 94,800 and Anvita 50,000. So that capital we have to take. So capital Ashwini, Anita, Anvita. So this will be the carried down amount of the partner's capital account. Total it, so you'll get 2,82,000. So we are done with all the items in the balance sheet. Now we shall go through the adjustment, anything we have left out. So all the items have to be written 2 times. So we have taken capital and goodwill twice. Half of the goodwill withdrawn we have taken. Depreciate furniture and appreciation we have taken. Provision for bad debts we have taken, doubtful debts. Next, 2,000 for outstanding repair bill. We had taken only once in your evaluation account. Now, once we have to take in the balance sheet, that is in the liability side because it is a liability. So, how do we take? That is outstanding repair bill 2,000. Now, balance both the side and the balance should tally. Okay, so both assets and liability should be equal. So, it will be 3,24,000. So, hope you are clear with the admission of a partner problem. Now, we shall go through the next one, 34th problem, that is on dissolution. Okay, so here they have given Suma and Rima are partners sharing profit and loss in the ratio 2:1. So, they have given their ratio. Their balance sheet as on 31st/3/2022 is as follows. So, they have given certain items in the balance sheet. Next, let us see the adjustment. On the above date, the firm was dissolved. So, they are going to close the firm. So, the firm have come to an end. And the adjustment are, the assets were realized. Realized in the sense they have sold the asset and got the amount. So, these are the assets and they have sold and they have got the amount. So, bills receivable at 8,500, sundry debtors at 42,000, investments at rupees 18,000, machinery 20,000 and furniture 18,000. And the next one, vehicle was taken over by Suma. So, here Suma have taken over one of the asset, that is for 82,000. Next, dissolution expenses they have given 3,000. All the liabilities were discharged in full. In the sense they have paid all the liabilities and they have asked us to prepare realization account, partners capital account as well as bank account. So, what are the accounts to be prepared under dissolution? Realization account, partners capital account, and we have to prepare the balance sheet. Okay. So, this will be the problem, a simple problem and a very easy problem also. Okay. Now, first we will prepare the realization account. So, here also there are certain steps. So, first step is what? Bring all the assets together. That is, you have to go through the balance sheet and see the asset side. Bring all the assets together except cash, bank, profit and loss account. So, we have to bring all the assets except cash, bank and profit and loss account. Okay. Now, we shall go through the asset side. So, bring all the assets except cash, bank and profit and loss account. Cash at bank, whether you have to take? No. Bills receivable 10,000 we have to take. Sundry debtors, here we have PDD. So, how do you take? Debtors will take 45,000 in the debit side and PDD will take immediately in the credit side 5,000. Okay. So, bills receivable in the debit side 10,000. Debtors 45,000 in the debit side, PDD in the credit side 5,000. Next, investments we have to take, then furniture we have to take, machinery we have to take, vehicle we have to take, profit and loss account no need to take. Okay. So, bring all the assets together except cash, bank, profit and loss account. So, we are not going to take cash at bank and profit and loss account. Remaining everything will take, but be careful while taking the debtors. Debtors 45,000 will take, 5,000 will take in the credit side. So, let us see how we have recorded. So, we have recorded bills receivable, sundry debtors 45,000. Immediately PDD we have taken in the credit side. Investment 15, furniture 20,000, machinery 25, vehicle 90. We have not taken cash as well as profit and loss account. Now, second step. So, this will be the first step. Second step, bring all the liabilities except what? Profit and loss account, reserve, fund, partners capital and partners loan. So, it should be partners loan only. So, except these 5 items we have to take all the liabilities. So, take all the liabilities except profit and loss account, reserve, fund, partners capital and partners loan. Now, go through the liabilities. So, we have sundry creditors we have to take, bills payable we have to take, Suma's loan, it is partners loan, no need to take, reserve fund, no need to take, capital, no need to take. So, there are only 2 items, along with that we have PDD also. Okay. So, sundry creditors, bills payable. So, second step is done. Third step is what? We have to record entry for assets realized. Okay, so third step. So for this, the information will be in the adjustment. So directly they'll give which are the assets realized. So they have given bills receivable at 8,500, sundry debtors 42,000, investment 18,000, machinery 20 and furniture 18. So how do you record? So you have to record it as by bank account in the bracket assets realized and write as it is what they have given in the adjustment along with the amount. So we have taken all the assets realized, total it, write it in the outer column. Okay, so hope you are clear with the third step. Next, be careful, whatever the assets you have taken in the debit side, it should come in the credit side. Either it should be realized or taken over by the partner. Now we have bills receivable, we have here also sundry debtors, we have here investment, we have furniture, we have machinery, we have vehicle, we don't have, correct? So vehicle is not realized. It means what? It has taken over by the partner. So the assets which are there, either it should be realized or taken over by the partner. Now only these many assets are realized. Vehicle they have not, vehicle it is not realized. It means that it is taken over by the partner. So let us see where it is. Yes, vehicle was taken over by Suma at rupees 82,000. Then how do you write? You write it as by Suma's capital account. So in the bracket you can write it as vehicle taken over. So at what price? 82,000. So all the assets what are there here have come here. Correct? In the same way, the liabilities which are there, it should come here. So let us see what they have given regarding liabilities. All the liabilities were discharged in full. So you are not going to consider the PDD. Other than that, we have two liabilities. So they have told it is discharged in full. In the sense, we have paid the liabilities full. How do you write? To bank account, in the bracket liabilities paid. So what are the liabilities we have? Sundry creditors 12,000, bills payable 20,000, total it, write it in the outer column, that is 32,000. Next we have last one, that is regarding your dissolution expenses. So they'll give in the problem, that is 3,000. So I'll take it as to bank account dissolution expenses 3,000. Now as usual, balance both the side. Now what are the steps to be remembered? First bring all the assets together except cash, bank and profit and loss account. Next bring all the liabilities together except profit and loss account, reserve, fund, partners capital and partners loan. Third step for assets realized. Fourth is what? For assets taken over. Fifth, liabilities paid. If any liability is taken over, then you will record here. And the last step is what? Regarding your dissolution expenses. Next, balance both the side. Balancing figure will be either realization profit or realization loss, which has to be transferred to partners capital account in the respective ratio what they have given. Now in this problem, debit side is more, that is 2,40,000, whereas in the credit side, you get a balancing figure of 14,500, which has to be distributed in their ratio they have given in the problem, that is 2:1. So for two partner, that is Suma and Rima, 14,500 into 2/3. So I'll get 9,667, and if it is 1/3, 4,833. So this is your realization account. Only this account is quite lengthy under dissolution problem. Okay. Next is partners capital account. Partners capital account is same as admission and retirement, but only few entries are here. Okay. So when compared to your admission and retirement, there are more entries under partners capital account, but here it will be 2 less. Okay. So first as usual, bring down the capital as by balance brought down, which will be in the balance sheet. Yes, 1,50,000. Next second step is what? Under admission and retirement, bringing of the revaluation account balance. But here we'll bring the realization account balance. So here it is loss. So it comes under debit side. To realization account 9,667 and 4,833. Now third step is what? You'll check your balance sheet whether there is any reserve, fund and profit and loss account. Let us see what it is. So here we have reserve fund. It is 36,000. Here it is in the liability side. There we have to record in the credit side of your partner's capital account as buy reserve fund 36,000 into 2:1. So I'll get 24,000 and 12,000. Next we have in the asset side we have profit and loss account. So it is in the asset side, there you have to take in the debit side. So how do we take? 2 profit and loss account 15,000 into 2:1. Okay. Next you will see your realization account. So anything which is transferred to partner's capital account. Now if you see here, so only under 2 situations you will record that entry, either asset taken over or liabilities taken over. Now in this problem we have asset taken over where we have transferred to Suma's capital account. There how do you write? In your partner's capital account, you write it as to realization account. Asset taken over, write the amount in Suma column, that is 82,000. Next, there is no liability taken over. Suppose liability was taken over, then you will write by realization account, and in the respective partners column who have taken over the liability, there you will fill the amount. Now balance both the side and the balancing figure will be transferred to bank account. So remember, in your admission and retirement, you will carry down the balance. Here you have to transfer to bank account. Okay, because next we are not going to prepare the balance sheet, we will prepare the bank account. So that will be the balancing figure. Hope you know how to balance. Each and every partner's column has to be balanced separately. Next, we will prepare the bank account. So once you are familiar with the realization account and partner's capital account, your bank account is very easy here. Okay, so first we will bring down the balance. So see the balance sheet. We have cash at bank 10,000. So same amount you will record it as to balance brought down 10,000. Now after this, you will go through your realization account, anything which is been transferred to bank account. Yes, we have bank account here and here also we have bank account. How do you write the entry? By realization account 32,000. By realization account 32,000 for liabilities paid. Next, for dissolution expenses, by realization account 3,000 for dissolution expenses. Clear? Next, in the credit side, let us see where there is bank account. Here we have. So how do you write? It is in the credit side. So you will write it as to realization account and the amount is 1,06,500. To realization account, that is for assets realized 1,06,500. Next, there is no other bank account. Next, if you see the partner's capital account, here we have bank account. How do you write? Now it is in the debit side by partner's capital account. But we are having 2 partners and we are having 2 amount. So how do you write? By Suma's capital account, by Reema's capital account, and you will write these 2 amounts. Okay. So by Suma's capital account and by Reema's capital account. So we are done with this. There is no other bank account, but we have left one more item. That is, in your balance sheet, we have not recorded what? That is Suma's loan. So that you have record in your bank account. How do you record? That is by Suma's loan. By Suma's loan account 7,000. Now balance both the side and your bank account has to tally. Your total of debit side should be equal to total of credit side. That is 1,16,500. So this is about your dissolution problem. Now moving on to the 35th problem. Cogniquest Limited issued 20,000 equity shares of ₹100 each at a premium of ₹10 per share. The amount was payable as follows. So this is a problem relating to shares. So I have told you there are 9 entries. Okay, so you have to learn that 9 entries properly. So all the entries will be similar. So you have to learn that 9 entries. Then you will find it very easy. Okay, so this issued 20,000 equity shares of ₹100 each. So that 100 is divided into 20 on application, 50 on allotment, including premium. Premium is how much? For 10 rupees. So it will be 40 plus 10. So 50, this 50 rupees include premium also. It means what? 40 plus 10. Next, 40 on first and final call. All the shares were subscribed and the money duly received except on first and final call on 1,000 shares. So all the shareholders have subscribed to the shares, but they have failed to pay. 1,000 shareholders have failed to pay first and final call. The director forfeited. So forfeited in the sense what? They have cancelled those 1000 shares and again they reissued at rupees 85. Okay, so they have reissued at a discount. Now the whole value of share was 100 rupees but they have reissued at 85. In the sense what? 15 rupees is discount. Pass necessary journal entries in the books of the company. Okay, now what is the first entry? Receiving of application money. So you have two entries under each stage. So first entry is receiving of application money. Next, transfer. Next, under allotment stage, due entry and receive. Next, under call stage, due entry and receive. Okay. Now come to the application stage, you will draw the format, write a neat heading journal entries in the books of Cogniquest Limited. Then you will draw the format, date, particulars, ledger, folio, debit, credit. Okay. So first two entries on application stage. First entry is for receiving of application money, bank account data to equity share application account. What is the number of shares? 20,000. What is application money? 20 rupees. 20,000 into 20. That is 4 lakh. Next, second entry is transfer. So you have to transfer the application money, equity share application account data to equity share capital account, being application money transferred, same amount, 4 lakh. Next, third entry is for what? Allotment. That is for due entry. What is the entry? Equity share allotment account to equity share capital, but we have premium also. So, to securities premium account. Now, how do you record the amount? So, 20,000 into 50. Okay. So, that is for equity share allotment. That is 10 lakh. But we have premium also. So, that is 20,000 into 40 and premium is 20,000 into 10. So, equity share capital 20,000 into 40. That is 8 lakh. To securities premium 20,000 into 10. That is how much? 2 lakh. So, your narration is being allotment money due on how many shares? 20,000 shares including premium. Next, your fourth entry is receiving of allotment money, bank account data to equity share allotment account including premium they have received. So, 20,000 into 50 or you can just transfer whatever the amount which is there in the allotment you will transfer or same amount you will receive. That is 10 lakh. Next stage is for what? Call money due. So, equity share first and final call account data to equity share capital. Amount how do you write? 20,000 into 40. Okay. So, 20,000 into 40 that is 8 lakh. But did all the shareholders pay? No. Under call stage 1,000 shareholders have not paid. Correct? So, there are total number of shareholders is 20,000 out of which 1,000 shareholders have not paid. In the sense 19,000 shareholders have paid the first and final call money. So, bank account data to equity share first and final call out of 20,000, 1,000 shareholders have not paid. So, 20,000 minus 1,000. So, it is only 19,000 into 40. So, 19,000 into 40, 7,60,000 and the narration is being first and final call money received. So, these are the 6 entries under 3 stages. Now, next entry is for what? Next entry is forfeiture entry. Okay, so those who have not paid, that is 1,000 shareholders who have not paid first and final call money. So, those shares has to be cancelled. So, your entry is share capital account data to forfeited shares account to under which stage they have not paid under first and final call. So, your entry is share capital account data to forfeited shares account to share first and final call account. So, now we are going to take only 1,000 shareholders which is not paid. So, 1,000 into 100, full value of share is 100 rupees, out of which we have received how much? So, see here, we have received application money and allotment money, but we have not received call, correct? So, under application we have received 20, allotment we have to take only 40, you have to exclude the premium. In the sense, 60 rupees we have received, 40 rupees we have not received, correct? Out of 100, 60 rupees we have received under application and allotment stage, 40 rupees on first and final call we have not received. Okay, so that you have to record here. So, equity share capital 1,000 into 100, full value. 2 forfeited shares, how much we have received? 60 rupees. And application 20, allotment 40. Share first and final call, how much we have not received, that you have to take here, 1000 into 40. So it will be 60,000 and 40,000. So narration being 1000 shares forfeited for not paying first and final call money. Next entry is for what? Reissue. So this is reissue entry. So they have reissued at rupees what? 85, correct? So they have reissued at rupees 85, 100 rupees shares, they were reissued at 85. So 15 rupees is what? Discount. So what is the entry then? Bank account data, forfeited shares account data to share capital account. So this will be the reissue amount 85. Now we are going to reissue only that 1000 shares which are being cancelled, correct? So bank account 1000 into 85, 85,000. Forfeited shares, what was the discount? 15 rupees. So 1000 into 15, that is 15,000. To share capital, what was the full value? 1000 into 100, that is 1 lakh. So narration being 1000 shares reissued at discount. Next, you have to transfer that forfeited shares to capital reserve. What is entry? Forfeited shares account data to capital reserve. Now in your forfeited shares account, we have 60,000 and in the next entry, we have 15,000. So that difference amount will be transferred to capital reserve. 60,000 minus 15,000, that is how much? 45,000. This will be transferred to capital reserve. So this is a problem for 12 marks. Easy problem. You have to go through all the 9 journal entries. And I have told you how you have to put the amount here. Next, 36th question. Pass the journal entries for the following. So this is a problem on debentures. Okay, so 12 marks problem on debentures. So they'll give you 4 situations. Okay, so under first situation, 10,000 9% debentures of 100 each at a premium of 10% and redeemable at par. In the sense, 110, they have issued at 110. 100 plus premium of 10% in the sense, 100 into 10%, 10. 100 plus 10, 110 and redeemable at par. Par in the sense what? Actual value. So, redeemable at par. So, issued at premium, redeemable at par. Next, issued 10,000 9% debentures of 100 each at a discount of 10%. Discount in the sense 90 and redeemable at a premium. So, they have issued at premium 110. Okay. So, issued 10,000 9% debentures of 100 each at a premium of 10%. So, they have issued at premium, that is 110. And redeemable at a premium. So, they have redeemed at a premium only, 110. Issued 10,000 9% debentures of 100 each at a discount of 10%. Discount in the sense 90 and redeemable at par, redeemed at 100. So, these are the 4 situations. Under 4 situation, we have 2 entries each. Okay. So, first entry will be issue entry, next entry will be transfer. Like that, for 4 situation, we have to record 2 entries. So, there are 8 entries. For 8 entries, it carries 12 marks. Now, we shall see the solution here. First, we will record the journal entries. As usual, we will draw the format of journal, date, particulars, ledger, folio, debit and credit. Okay. So, first entry is for what? Receiving of money. Correct. So, bank account data to debenture, application and allotment account. So, now what is the number of debentures? 10,000, it is issued at 110, correct? So, 10,000 into 110, it will be 11 lakh, okay? But how did they redeem? So, there was while issuing, there was a premium also, correct? So, which will be transferred to securities premium account. So, how do you transfer then? Debenture application and allotment account to 9% debentures account to securities premium reserve account. So, debenture application and allotment, how much? That is 11 lakh. Whatever it is, we will take the same amount. To 9% debentures, so 10 lakh. That is 10,000 into 100. But we have a premium of 10, correct? So, 10,000 into 10 will be transferred to securities premium reserve. Your narration will be being debenture application and allotment money transferred. For this entry, it carries 1 mark and for this one, 2 marks. Okay. Now, in the same way, the third entry for the second situation, it is issued at discount, correct? So first entry, bank account data to debenture application and allotment account. So what is the number of debentures? 10,000. So what is the issue price? 90. So 10,000 into 90, it will be 9 lakh, and the narration being debenture application and allotment money received. But how did they redeem? They have redeemed at premium, correct? So we have a loss. So what is the entry then? Debenture application and allotment account data, loss on issue of debentures to 9% debentures account to premium on redemption of debentures, because we redeemed at premium, correct? So debenture application and allotment, so how much we have taken? That is 9 lakh. So loss, let it be like that, to 9% debentures. So this will be the actual amount, 100. Okay, so that will be 10 lakh. At what price? We have redeemed at premium, that is 1 lakh. So the balance will be the loss, that is 2 lakh will be the loss. So this will be the entry for transfer. So the entry will be debenture application and allotment money transfer. Now under third situation, it is issued at premium, correct? So bank account data to debenture application and allotment account, 10,000 into 110. So bank account data to debenture application and allotment account, 10,000 into 110, that is 11 lakh. But how did they redeem? So they have redeemed at the premium of 110 only, correct? Then what is the entry? So debenture application and allotment account, 10,000 into 110, that is 11 lakh. Loss on issue of debentures. So we have a loss also because it is redeemed at a premium, 10 rupees premium. So 10,000 into 10, that is 1 lakh. To 9% debentures, actual amount, that is 10 lakh. To premium on redemption. So we have issued at premium as well as redeemed at premium. So premium on redemption of debentures, 1 lakh. To securities premium. While issuing also we have issued at premium. So that will be transferred at to securities premium, 1 lakh. So your narration will be being debenture application and allotment money transferred. Next situation, last situation. So they have issued at a discount. So what is the entry? Bank account data to debenture application and allotment account, 10,000 into 90. So bank account data to debenture application and allotment account, 10,000 into 90, that is 9 lakh. But how did they redeem? So they have redeemed at par, correct? So what is the entry then? So debenture application and allotment account, 10,000 into 90, that is 9 lakh. We have redeemed and we have issued at a discount, no? But redeemed at par. So that discount have to be taken. Discount on issue of debentures, 10,000 into 10 to 9% debentures account, 10 lakh. So for every first entry, it carries 1 mark. Second entry, it carries 2 marks. In the second situation, it is 1 mark and here it is 2 marks. This is 1 mark and here it is 2 marks. And this is 1 mark and here it is 2 marks. Okay. So like this, the 12 marks will be allotted for this problem. The next question, from the following balance sheet. So this is relating to comparative or common size statement question they might ask you. So here they have asked what? Common size balance sheet. Okay. So from the following balance sheet of Venus Company Limited, prepare common size balance sheet as on 31st/3/2021 and 31st/3/2022. So they'll give you the liabilities. So this will be in the balance sheet format. They'll give the liabilities. If not, if it is in the format, you have to go through the format. Okay, so as per the order, you have to record each and every entry. Okay, so they have given the liabilities. In the same way, they have given the assets along with the amount. Okay, so first you have to know the format here. Write the heading common size balance sheet as on 31st/3/2021 and 31st/3/2022. Then draw the format, particulars, absolute amount, 2 columns, percentage of each item to total assets, that is 2 columns. Okay. Now, as usual, we'll start with equity and liabilities. First, record all these. Shareholders fund, under that we have share capital, reserves and surplus, non-current liabilities, under that we have long-term borrowings, current liabilities, trade payables. Fill the amount also, respective amount you will fill as it is. Okay, so we are done with this particulars as it is what they have given in the problem. So first know the format So you have to know this under which order we have to record. In the same order you will record. Suppose if they have given in the problem in the order only, then write as it is. If not, you have to write it in the order. Okay, so write in the order, same amount you will record here. In the same way, assets also. Assets, non-current asset, under that we have tangible, intangible. Current assets, inventories, non-current assets. Okay, so you will write in the same order. Then you will write the total. Okay, now you will write the amount also. Now how to find out the percentage? So first you will do one. So for the total of liabilities and total of assets, you have to put it as 100%. Okay, so for total of assets and total of liabilities, you will put it as 100%. Now how to find out this percentage? Okay, so you will find out now this amount you have to take. So to find out this percentage of 2021, so we'll take it as 24 lakh divided by what is the total of liability? 65 lakh. 65 lakh into 100. In the same way for the next one, 10 lakh. In order to get this percentage, 15.38. So how do you calculate? 10 lakh divided by 65 lakh into 100. Next for 15.38, 10 lakh divided by 65 lakh into 100. Next for this one, 21 lakh divided by 65 lakh into 100. So like that you will do for 2021. For 2022, how do you write? 30 lakh divided by 83 lakh into 100. 15 lakh divided by 83. Now in order to get 36.14, how do you get? 30 lakh divided by total 83 lakh into 100. So I'll get 36.14. For the next one, for 18.07, 15 lakh divided by 83 lakh into 100. Next for 14.46, 12 lakh divided by 83 lakh into 100. Next 31.33, 26 lakh divided by 83 lakh into 100. Like that you will do for liabilities. In the same for assets also. In order to get 40%, how do you take? 26 lakh divided by 65 lakh into 100. Next, in order to get 18.46, 12 lakh divided by 65 lakh into 100. Next for 10.77, 7 lakh divided by 65 lakh into 100. Like that you will go on making. Now for 2022, 28 lakh divided by 83 lakh into 100. So I'll get 33.73%. Next 20 lakh divided by 83 lakh into 100, you'll get 24.01. Till the end you will do like that. So this is common size statement where you will take common one item, that is total of assets and total of liability. So this you have to write first only 100%. Then you will go on dividing with each and every item. So hope you are clear with common size balance sheet. Next 38th problem. From the following information calculate. So this is on accounting ratios. So they'll give you 6 ratio to calculate. Each ratio carries 2 marks. Okay. So along with that they will give certain particulars. Now for each and every ratio to be calculated, you have to know the formula. Okay. Now what is the formula for inventory turnover ratio? Inventory turnover ratio is equal to cost of revenue from operation divided by average inventory. Now whether they have given cost of revenue from operation? No. How to find out cost of revenue from operation? Revenue from operation minus gross profit. So we'll get cost of revenue from operation. Now here they have not given cost of revenue from operation. So how to find out cost of revenue from operation? Revenue from operation minus gross profit. Revenue from operation is nothing but what? Sales. Sales minus gross profit or revenue from operation minus gross profit, you'll get cost of revenue from operation. Sales minus gross profit, sales is how much? 12 lakh minus 2 lakh 40,000. So you'll get how much? 9 lakh 60,000. Now whether they have given average inventory, yes they have given directly. So you can directly apply the formula. Cost of revenue from operations divided by average inventory. So inventory turnover ratio is equal to cost of revenue from operation. Just now we calculated 9 lakh 60,000 divided by average inventory is 1 lakh 20. So you'll get 8 times. So you'll get 8 but you have to write times here. Okay. Next, trade receivable turnover ratio. Your formula is net credit revenue from operation divided by average trade receivable. Now whether they have given net credit revenue from operation, yes, 7,20,000 divided by average trade receivable 1,80,000. So 7,20,000 divided by 1,80,000, it will be 4 times. Next, trade payable turnover ratio, your formula is net credit purchase divided by average trade payable. Okay, so this will be the formula. Now whether they have given net credit purchase, yes, 6 lakh divided by average trade payable, that is 3 lakh. 6 lakh divided by 3 lakh, so we'll get 2 times. Next, gross profit ratio. What is the formula? That is gross profit divided by net revenue from operations into 100. Now what is the gross profit? So gross profit is 2,40,000. Revenue from operation itself is net revenue from operation. So 2,40,000 divided by 12 lakh into 100. So we'll get 20%. Next one is net profit ratio. Your formula is net profit divided by net revenue from operations into 100. Now whether they have given net profit here, yes, so they have given net profit 1,20,000 divided by 12 lakh into 100. So 1,20,000 divided by 12 lakh into 100, that is 10%. Now what is the formula of operating ratio? Operating ratio is equal to cost of revenue from operation plus operating expenses divided by net revenue from operation. So what is cost of revenue from operation? That is 9,60,000. Operating expenses, so they have given here. So operating expenses is 1,20,000 divided by net revenue from operation is, we know that is 12 lakh into 100. So we'll get 90%. Okay, so always remember, for this calculation of 6 ratio, it carries 2 marks, and first 3 ratio, it has to be recorded in terms of times. Whereas other ratio, it has to be like gross profit ratio, net profit ratio and operating ratio, it will be showed in terms of percentage. Okay, so this is about the 12 marks problem regarding ratios. So hope you are clear about it. So there are 7 questions, out of which you are going to answer only 3. So first problem was on not-for-profit organization, then admission of a partner, then dissolution of a partnership firm. Next we have shades, debentures, then on comparative or common size statement, and the last problem is on accounting ratios. Now your last part of the model question paper, that is part E, practical oriented question. That is 8th main, answer any 2 questions, each question carries 5 marks. So the total weightage is 10 marks under this part. So the first question what they have asked, that is 39th question, how do you treat the following in the absence of partnership deed? So you know about it, how do we treat each and every item if there is no partnership deed? So this is from the 2nd chapter, that is accounting for partnership. Okay, so profit sharing ratio, how do we treat? Equal. Interest on capital, not allowed, no interest on capital to be given. Interest on drawings, no interest on drawings. Interest on advances from partner or interest on loan, it has to be given 6% per annum. Remuneration, no remuneration to be given to the partners if nothing is mentioned in the partnership deed. So how do you write the answer for this? Profit sharing ratio, equal. Interest on capital, not allowed. Interest on drawings, not allowed. Interest on advances from partners, allowed at 6% per annum. Remuneration to partners for firm's work, no remuneration to partner. So this carries 5 marks. Write the pro forma of balance sheet of the company with the main heads only. So I told you it will be very helpful if you learn the format of balance sheet. So they have asked, so we have to write the pro forma of balance sheet with the main heads only. Okay, so with the main heads we have to prepare the balance sheet. Now, how do you write pro forma of balance sheet of a company? You can write your imaginary name, XYZ Company Limited, Schedule 3, that is Schedule 3 of Companies Act 2013. So, this will be the format. Balance sheet as at 31st/3/2021 and 31st/3/2022. Your format is particulars, note number. You can write only 1 amount column or you can write 2 amount column also. Okay, so how do you begin? Equity and liabilities, under that shareholders fund, and below that we have share capital and reserves and surplus. But here they have clearly asked with the main heads only. So I'll write shareholders fund, and the second is share application money, pending allotment, non-current liability, current liability. Then you'll get the total. Assets, non-current assets, current asset, you'll get the total. No need to write the amount because they have not told to prepare the balance sheet with the imaginary figures. Suppose if they tell with the imaginary figures, then you have to record the amount here, that is imaginary amount. Okay, so only this much for 5 marks. Next, last question, 41 question. Prepare comparative balance sheet, comparative statement of profit and loss with 5 imaginary figures. So here we have to prepare comparative profit and loss account with 5 imaginary figures. So you know all the main heads, correct? Revenue from operations, other income. So you can write everything with your imaginary figures. Along with that, you have to calculate and write. So how you can answer this question? So put an imaginary heading for that, ABC Company Limited, comparative statement of profit and loss for the year ending 31st/3/2017 and 18. Okay, so particulars, to amount column, increase or decrease in rupees, increase or decrease in percentage. So this is a format of comparative P&L account. Okay, so first is revenue from operations, other income, then you'll get total income, that is by adding 1 plus 2 will get total income, less expenses. Fourth is expenses. Fifth is profit before tax. Next, less tax, profit after tax. Then I'll put the imaginary figures. So here I have put 10 lakh and 15 lakh. Then how do you get increase or decrease in rupees? 15 lakh minus 10 lakh. That is 5 lakh. Next, 3 lakh minus 2 lakh, 1 lakh. 18 lakh minus 12 lakh, 6 lakh. 13 lakh 50,000 minus 9 lakh, 4 lakh 50,000. 4 lakh 50 minus 3 lakh, that is 1 lakh 50. 1 lakh 35 minus 90,000, 45,000. 3 lakh 15 minus 2 lakh 10,000, 1 lakh 5,000. How to calculate the percentage? 5 lakh divided by 10 lakh into 100. Again 1 lakh divided by 2 lakh into 100. 6 lakh divided by 12 lakh into 100. 4 lakh 50 divided by 9 lakh into 100. 1 lakh 50 divided by 3 lakh into 100. 45,000 divided by 90,000 into 100. 1 lakh 5,000 divided by 2 lakh 10,000 into 100. You'll get these percentage. So you can write your own numbers. It need not be always 50% or it need not be the same numbers. You can put your imaginary numbers. But make sure that your calculation is correct. Okay. So this will be the 3 practical oriented question. So my dear students, in today's session, we have learned how to solve the problem under part D and part E of your model question paper, that is for 12 marks as well as 5 marks practical oriented question. And all the very best for your exam. Thank you.